Is it the best time to borrow a business loan? Would it be in the future instead? Or how about did my time already pass? Hi, this is Michael with Viral Funding Solutions. I'm a business funding expert. No further introduction. The answer to that, it depends. Where are your funds going towards? What are those uses? Do you have any current obligations you need to meet in a certain specific time frame? Is it a new opportunity you're taking? Are you going to get a new stream of revenue coming into your business if you did it this way? Is it existing revenue you're looking to move up? There's a lot of things there, as well as is it for expenses? There's payroll, marketing and advertising, equipment costs, utilities, bills, insurance, mortgage. The list can go on and on. So you, as the business owner, even the real estate investor, needs to understand the current market, how far that dollar can actually go. There's other things that are happening right now with like supply chain issues and a lot of things that are causing mass disruption. I'll get into some of the things that you can then look at to mitigate those risks, but you really do need to pay attention to what those uses of funds are for. And if you're going to take on a new opportunity or an existing one to then better develop a relationship or a new one that's going to help you more longer term, maybe not necessarily short term or right away, or it does, but you have to understand the ROI from that. You have to understand the cash flow gains. Is it going to free up cash flow as well? Enough cash flow to pay off other expenses and to keep circulating that money and growing your existing revenue and allocating and giving more away to others that you need to give that away to. So it's a combination of these things. And what most business owners don't understand is how to assess risk, because they're not already, I don't want to use the word savvy, they're not in it with their business management. Business management, the focus, if you put the focus on that right now, I'm going to see a big change in the upcoming year. For those of you who really pay attention to all that, understand also your day-to-day operations, how to manage that revenue as well, how to manage that cash flow, how to understand your profitability, how to increase it, why has it been decreasing, what do you need to raise, and if you raise this, would it only be temporarily? So you got to understand that. And right now, what a lot of people are suffering in this market, and because the rates are also rising to curb inflation and do all these other things that are just out there in the market, I can spend hours upon hours, but keep it short. The rates haven't been in a good position. There's more medium to higher rate borrowers than there are lower. So it just depends on the service, and can you or can you not qualify for? Is that your best service? And you have to weigh these things. But the expenses right now that I'm seeing is they're just going up. The cost of doing business, the cost of securing contracts, you're going retail, but you're eating up into your profits. Your margins currently are already in good shape. They were once a year ago. Now this year, where are they? They're sitting at 5, 4, 3%. Now, the previous years, you can get to 15%. And there's different things like gross profit margins, net operating income. There's so much more to look at when we talk about profits on different scales, if we break it down micro or we break it down macro, and reverse engineering macro, or if you don't have an actual annual gross revenue at the moment, but you're projecting this, do you understand what X, Y, and Z would look like? If I have X of this, Y would be this, Z would then generate me this amount of profit. So there's little things in these parts of the equation that you have to pay attention to. Before I go any further, just so you know this, I'm an introvert at heart. I run multiple businesses. I have one in the digital marketing agency, lead generation space. I help out a lot of people, even family more than most right now in this time. I've done that for a while, so I kind of changed things up. And then I have affiliate marketing in the health space. I've been doing that for some time. Other verticals, other ventures. This is my primary focus as a business loan broker expert, business funding expert. And I work with all services, in case you're asking. Anything on the real estate side, anything business side, from startups, building the formation, incorporation, all of this stuff together, to understanding what you need to do as a startup, how to have the business operations, everything going right, to then getting funding, what those funding situations could then look like, all the way up to like SBA and above, other ways that you wouldn't even have thought of. I've done all of these services. I've worked with a lot of people, and the ultimate thing that I care about most is the person, that they are in great health and that their relationships are in position and that their wealth is too, and whether that's in their business or in other ways, in other capacities. I do care about all of these things, and that's what separates me as well, because I'm also very loyal. I'm a humble person, at least people would say, and I think I'm very respectful, trustworthy. You don't have to worry about these things with me. I don't want to have to worry about that with you, but in a common market like this and in others, it's usually the other person that I'm worried about, because there's so much unpredictability. And what I'm not necessarily not seeing is I'm seeing like all these applications coming in, but there's less of a commitment. And that commitment comes from not really needing the funds as much as they think they did, or it's the high cost of borrowing that they have to get. Even if it's a lower interest in this market considered lower, they're not seeing the return, or they're not seeing their funds that you're going to have enough of over the 6 to 12 months that they don't have to use. That's what a lot of you are looking for right now, is because everything is getting so much more expensive, the cost of doing business. And so whenever I help out a business owner, I really understand the operations, the ROI, cash flow, all this stuff that I do for my own businesses, by the way. What the gaping hole I'm seeing is too much expenses, debt accumulated here. They got to pay that off first if they want to be here. Before they get there, they have to show this. And so you're already starting at point zero. And to get out of that, it's not going to happen in just 3 months. It won't happen in 6 months. It's more 6 to 12 plus months. So a lot of you are preparing right now for emergency funds. And those of you who have tried to get funding, either you didn't get any or you got some, just not enough of. So you're having to continuously come back and reapply. And that's what happens over and over in this market, guys. What you guys are going to see, for those of you who normally get medium to higher rates, it's just what's going to happen. Like I spoke to a lady today. Yes, you are not going to get favorable terms because of your years or your time in business. Your credit is up there, looks clean. And then your revenue is there. It's the depositing. It's the industry a little bit. But you're going to likely start off with 4 to 6 months. Or in this case, because they have higher credit, they have the time in business. So they're going to start off closer to 7 to 11 months. If they had less time in business, less than 6 months, it would have been different. But because they have around 9 months getting closer to a year, they're going to be getting closer from 7 to 11 months, probably closer to the 9 to 10 month, if not 8.5. And so borrowing $40,000, $45,000, paying back a higher rate, can they do that? We wouldn't give them something that they couldn't afford, of course, but they have to then decide, like, that's coming out of my account at this time. Will I have enough money? And so there's so little cash flow in a business right now, and a lot of you are not optimizing for that. You're not optimizing for profits. And when it comes to lending, we look at profitability I look at all that. I didn't say this. I am like an underwriter, so I pre-underwrite a lot of files. Think of me as the underwriter, and I might just become one, and or the lender. But I really thrive in looking at documents. That's where I earn my keep. My bread and butter is documentation every single day. In the morning, I did a lot of that for a lot of clients. Documentation, bank statements, personal, business tax returns, P&Ls, balance sheets, a lot of things. Their AR reports, everything. And so I know how to do an analysis on all of this even before it goes to the lender. And with the lender and I can then look at things, the underwriter and I can look at things. And I'm pretty much even with what they see. So getting that feedback from them is very telling. And so if you guys were wondering how to get started, by the way, and I'll continue in a second, in the bio or in the description down below, there will be a link you can click on. And this will be a way for me to pre-screen. It's not an application, and I'll be able to pre-underwrite a file even without looking at documents. Once the documents are there, then I'll do my work. Don't worry about that. And so I'll be able to show you in a very highly personalized and customized email response with the PDF on what your best funding option and options are, thoroughly broken down, top to bottom, even showing you information that is not publicly released. Just imagine having information that's not even been publicly released, and people don't even These lenders don't even want to show me. And some of it I can't because they would tell me to. And you had that. You're like, oh, now I know I can't qualify for credit or collateral or cash flow. Now I know I got to work on my trade credit. Nobody ever told me this. I get through it much faster, take time away from my own business while that's working, kick my feet up into the sand while I'm drinking my cool adult beverage next to me as I pick it up. A very slow sip because you're so patient and relaxed. Laying back as you see the sunset going down. It's still very hot out. And you're just so more mellow and relaxed and not having to check into your business so often because we're able to streamline things and move forward without hesitation, without making mistakes. That's the problem that I see in this market. Too many mistakes and not really understanding the funds. So back at this, there's so many things I can get into the market that I'm not going to do into this video on like the supply chain, on current numbers here for this industry, for that industry. But there's still a lot of problems. And you can't borrow enough of, so you got to come back and get more of over time. And that's how you have to look at it. Because even if it's a medium to higher rate, can I take less and still do enough with it? Maybe I won't make the most, but I can take enough up to then lower my repayment. It might not be a favorable term, or if it is, great. But what's your repayment? The interest, okay, the interest is the interest, whether it's good or bad. But if I'm going to take this as a new opportunity to make more money with it, and I'm going to generate an additional $20,000 to $55,000 plus from already $15,000 that I'm making per month, your ROI is there. Your profits are going to be there. How much cash flow would that free up in that time then? Well, for about 7 months, I'm going to have 15%, 20% of this. I'm going to have an additional 50 to 100,000 of that. If I just secure, like, if you knew that and you had pattern recognition, and that's what's most important in this market for you guys to mitigate risks, is to look at the pattern recognition, and that will tell you if you need to borrow more money or not. And if you're a startup, you may not have that, but if you understood by working in that business or at least seeing it, you would understand better that this is what I can capitalize on. So everything you guys look at right now and ask yourself, is it right for me to take a loan? Is it not? It's not entirely the rate. It's not entirely the market's fault. It's how our structure of our business is set up. Yeah, those can impact us without us doing anything, and we can't do nothing about it. And then there's a different point to be made. But can you seize current opportunities? What you need to be focusing on is not how do you generate the most amount of sales and revenue. That's absurd in a market like this. You're taking on too much. You have higher costs when you could have gone direct to consumer in a way like this, and you would have put an online store to promote and sell your products that way instead of going retail. There's a lot of different things we can jump into. But distribution, and I spoke about this the other day. I'm going to close up here in a second. Distribution is what you should be focused on. How can I acquire more leads at a lower cost? Although costs are going up, how can I acquire X amount of people? Not customers, because they're people. And one, they're people before they become a client or a customer of yours. So how could you bring in X supply amount? And what do you do with the existing amount that you already have? So if you already have an ample amount, how do you focus on pulling the lever that'll help you increase more lead flow and build that relationship with them? Consistently nurturing that and you being the go-to solution to it. And with your existing clientele, are they repeat? Making sure you keep that up. As you bring in new, you don't want to churn too much. You lose a client here that was only there for 2 months, gone. But you had to bring in another one to make up for that. Oh, another one here. Okay, at this rate, you're going to go out of business if you continue doing that. So mass distribution, understanding how to optimize for better conversions and getting people that you can focus on building your own ecosystem and your own tribe. Focus on culture. Focus on the environment. Focus on your why. Focus on why you. Focus on why the business, one thing, but why you. Why should people even care about you? That's the honest truth right there. And if you can build a culture like that, and you can build what they would call a cult of people, of a following, that's why it's going to become so much better that you do that, because now you're going to have people that can actually understand you more effectively, as opposed to you bring somebody in who really doesn't know about you and your brand personally and in business and expect something from them. That's gone out the door. You're going to have to take more time to develop things. But yeah, that's where I want to leave it at. Let me go to the comments here and then I will close up. But again, guys, there's more information on all of this, like should you or should you not take funding, and there's many things, but these are just some of the primary ones to look out for, and understanding how to drop, how to increase, how to understand if you really have a need for it, can you stay committed through it. A lot of the times you're going to be searching and searching and searching and searching for the best deal. It doesn't exist, and careful of not just applying anywhere and everywhere. It's not a good sign. And I have the best lenders and underwriters too, by the way, for each industry. You guys don't have to worry about that. 150K how? Okay, so this was the heading that I put on the video. I didn't change it. Sorry, guys. Sometimes I forget to change it. But it was based upon an SBA Bolt loan. So there's an SBA Bolt loan up to $150,000 in working capital only. Very huge in the market right now. This is the one that's like working capital wise. So it'll help you sustain having extra cash on hand, and then also help you clear up existing debt and help you with those expenses up to $150,000. I won't go into all of the details on this because that's not the purpose of this video, but I'll leave more information of that down below in the description. But the questionnaire is the best place to begin with. We're speaking about, is it the best time to get a loan now or not? All right, everybody. That's where I want to close up. Appreciate you guys. Thank you for tuning in. This should be on the replay on YouTube. If it is, down below in the description will be more information. The questionnaire form is the best place to begin with. If you've submitted that and I haven't gone back to you, I will soon. If you have, then you've likely received something from me. You should know that. And or I'll follow up very nicely. I don't pressure anybody. And that's where we will leave it at. Thank you all for tuning in. Have a great one. Speak to you on the next one.